JSW Cement, led by Parth Jindal, is eyeing the public markets and looking to raise 3,600 crores via its IPO. This is one of the most anticipated IPOs of 2025, and they have ambitious expansion plans, looking to increase or double their grinding capacity in the next few years. In this episode of IPO KYC, we decode the IPO, the strategy, the risks, and the man himself. Parth, thank you very much for speaking with us.
Thank you.
So your aspiration is to make JSW Cement a top-tier pan-India cement company. How does this IPO fit in your strategy and long-term vision?
No, absolutely. I think, over the years, JSW Cement has been growing steadily. In 2016, when I took over the business, we were a 6 million ton company. And over the last 9 years, we've tripled our capacity from 6 million to now over 20 million tons. At that time, we were primarily only in the south. Now we've entered the markets of the west and the east. And I think now that the company has grown to this size and scale, we are truly poised for our next phase of growth, which is to enter the markets of the north as well as the central parts of India. And the IPO and the proceeds of the IPO that we're getting is going to allow us to expand into the north and over time expand into the central part of India as well. So, I truly believe that in order to be relevant in the Indian cement industry, you need to be present across the country, because you never know which region is doing well, which region is doing badly. So in order to truly make a well-diversified and stable business model, being in different regions and all the regions of India is very important, and that's the ambition of the company.
So talking about the expansion plans, Parth, you're looking to increase your total grinding capacity to 42 million tons per annum and even double the clinker capacity. When do these capacities come on stream?
So at the moment, we are in phase one of our expansion, which is we are adding a grinding unit in Odisha, in Sambalpur, and we're adding our integrated unit in North India, in Rajasthan, in Nagaur. These two plants, although we have guided that they'll be ready at different times, I'm very confident that within this financial year, both of these plants will be up and running, which will take our capacity from 20.6 million tons to about 26 million tons. We have also started the groundwork for the other expansions that we have in place, which is some of them are brownfield in our existing locations. So Vijayanagar in Karnataka, we want to add 4 million tons of grinding there. Dolvi in Maharashtra, where JSW Steel has a large complex, we want to add 4 million tons there. And then our complex in central India, which is the mines we acquired from India Cement about 3 years ago in Hatta in Madhya Pradesh. So all these projects are primed, and we can actually begin work very, very quickly. It's our endeavor, it's my endeavor, my aim to get to 41 million tons within 3 to 4 years. The sooner the better, but obviously the performance and the leverage needs to be in check, and we would modulate our growth based on our leverage.
Got that. And 60 million tons per annum, you've got that ambition too?
Yes, so within the existing locations, within the existing mining deposits that we have enough limestone and enough land, as well as enough fly ash as well as slag, which tied up to take our capacity to 60 million tons.
Okay.
So the way to think about us is today we're 20.6 million across 7 locations. These 7 locations themselves can go from 20.6 to 30 million tons. And then the balance 30 million tons would be coming from 3 different sites. Rajasthan and Nagaur, along with its split grinding units, would be 15 million tons. Central India, which is Madhya Pradesh and Uttar Pradesh, should be 10 million tons. And then Gulbarga cluster in Karnataka and a grinding unit in southern part of Maharashtra would be another 5 million tons. So this entire strategy is in place to 60 million tons, which we hope that once we get to 41, we will embark upon the journey from 41 to 60, which again should take another 3 to 4 years. So if all goes well, we could get to 60 million tons, sometime in the early part of next decade. And if it goes a little bit worse, then it'll be in the middle part of next decade.
Well hedged, Parth. So today, I think you're the 9th largest player by capacity.
That's right.
Can you get into the top 3, top 5, challenge the Shree Cements, Dalmia Cements of the world?
I think first of all, I think all the companies that are there in the cement industry have been around for a very, very long period of time. And they've all built fantastic businesses, whether it's Bangarji or whether it's Punit Bhaiya, they've all built phenomenal businesses. And they all have their own growth plans. So I think the top 4 players of the country are well out of reach at the moment. And obviously they also are expanding.
Sure.
I think the 5th spot is up for grabs, and that's the aim, is to try and see how quickly we can get there. Having said that, you know, inorganic opportunities in the cement industry, as we've seen over the years, have come, and there's been a lot of consolidation. And one of the disadvantages of being in the cement industry is that the competitors that we deal with on a daily basis are all sitting on very strong balance sheets. So for them to acquire inorganically is far easier than for us at this stage to acquire. But obviously with the IPO coming in, with liquidity coming in, with currency being available, tomorrow if a very exciting opportunity comes in a market that is attractive, we could do a QIP, we could do a follow-on, we could do so many things which the group has done in the past, which will allow us to compete. But all said and done, my fundamental belief is that you need to be at least a 10% market share player across the country to be relevant. And I believe that, you know, last year the Indian cement industry consumed 435 million tons of cement. I believe over the next 5 to 6 years, this number will grow at a CAGR of about 6 to 7% in lockstep with GDP and get to about 750 million by 2030, 2031. So in order for us to have 10%, we would need to be selling 75 million, which is higher than our current plan, but still getting to about 55, 60 million tons of sales, 7 to 8% market share would be the first step, and then to get to that 10%. So I do think the cement industry, the consolidation wave will continue, and it will become an industry which is dominated by, you know, call it 6 to 7 players.
Yes. Got that. Just a quick word on your balance sheet. Your debt today is 4,200 crore. 520 crore of the IPO proceeds go in reducing your debt. What would the post-listing, you know, debt look like and leverage ratios? You've got so much Capex coming on stream. So how would the leverage ratios move?
No, I think if you look at our debt profile, last year due to the difficulties that the industry faced, our net debt to EBITDA almost touched 5 times, which is way above healthy level or a comfortable level for the company. It is my intention that over time to bring the debt as close to 2 times as possible, and not exceed 2.5 times. So this is not something that this may change from time to time given the dynamics, but in general being below 2.5 times net debt to EBITDA is the aim of the management.
Okay, got that. But now, considering your ambitious expansion plans, what is the total estimated Capex outlay for you?
Yeah, so I'm not allowed to actually give the forward guidance in terms of Capex, but what I can say is that building organically for JSW is significantly cheaper than building for any of our large competitors or in any of the acquisitions that are happening. So on average, the acquisitions have been happening at about $120, $130 per ton. Some of them even as high as $150 per ton. Our Capex intensity for this phase of expansion is less than half of that.
Okay. So you're going to be building incremental capacity at 60, 70?
That's it. So close to that.
Close to that. Okay. What about the operating, the EBITDA, right, per ton? In FY25, it was depressed. I think it was sub 700. What is the number looking like in Q1?
Again, our Q1 results will be announced soon after the IPO. But I think the industry has seen a sharp increase in EBITDA per ton. I think the pricing power has come back into the industry, and all our competitors have announced their results at nearly 30 to 40% EBITDA improvements, both overall as well as on a per ton basis. So we would be in that ballpark for sure, and we would announce our results imminently after the IPO.
Got that. So the industry in Q1 on an average would be 1,000 rupees per ton?
That's right.
In terms of EBITDA?
That's right.
And you're saying you should be in line?
We are In and around that number. Again, for us at JSW Cement, we have two distinct product lines. So we have our cement business and we have our GGBS business. And GGBS is primarily going into the ready-mix concrete industry, whereas cement is going into all sections of the construction ecosystem. So for us, both the GGBS side as well as the cement side, we saw an improvement in realizations. We saw a much bigger improvement on the cement side and a lower improvement on the GGBS side. But overall, at our size and scale, we would be very close to where the larger industry players have been because of our inherent advantage and profitability that we have in GGB.
So just, for the sake of numbers, let's assume in Q1 you're in line with the industry and that's about 1,000 rupees in terms of operating EBITDA per ton. For the rest of the year, given the demand supply, the competitive intensity, how should the number, trend?
I think this year we're seeing a lot of consolidation play out, and a lot of capital has been deployed by the number one and number two player into the industry. So if you look at Ultratech, they acquired India Cement. You look at Adani's, they acquired Penna, they acquired Orient, they acquired Sanghi. And then we all know that there's a huge fight going on right now for the JP assets as well. Yeah. So after deploying so much capital, I think what we're seeing is that the number one and number two player are now really playing a very big role in keeping prices very stable. And obviously we as a ninth player in the industry, we are a price taker. So we follow what the leaders are doing in the industry. And we're seeing a lot of stability in the market. For JSW, as our volumes go up, our fixed cost absorption will continue to come down, and that will allow us to improve our profitability. So I would say Q1 was just the beginning. I'm very confident and very hopeful for the entire industry that this year will be a landmark year for the cement industry.
Okay, so competition is rational. And in the second half of the year, can we expect realizations to improve for the industry?
I think prices at this level are at a very healthy level. Okay. Now, I would not be one of the promoters in favor of any further price increase.
Got it.
I think if these prices can be stabilized and these prices can sustain, that in itself would be a huge achievement for the industry.
At these levels. Got it. So FY25 loss was an aberration? I mean, you should be profitable this year?
Yeah, absolutely. I think there were three accounting adjustments that led to this. One was obviously a large expense on account of the fair value adjustment of the CCPS that we have. So that obviously goes away with the IPO. Second was on the performance of our subsidiaries. So we had the Shiva Cement, which was loss-making. We had our Fujairah business, which didn't do well last year. And then we have our investment in JSW One. So I think on that, I think Shiva Cement, very hopeful that with the commissioning of the grinding unit at Sambalpur, which is part of Shiva Cement, it'll truly become a cement company from just being a clinker supplier, and that should improve its profitability. The second is Fujairah is doing extremely well now. I think the entire UAE region is doing extremely well due to what's happening geopolitically, and there's a huge thrust on real estate over there, which is allowing clinker prices and cement prices in the region to be strong. So we're seeing a very strong performance from our Fujairah business. And the losses at JSW One, it's a tech startup kind of a business, but they're coming down. And we expect that by Q4 of this year, JSW One on a standalone basis will be profitable.
Okay. At the EBITDA level, it'll break even.
It'll break even, that's right. So that should help. So this and then the CCPS and ESOP adjustments all go away. So very, very confident that not only that we will be profitable, but that we'll be healthy and it'll be a good performance.
So Shiva Cement stays as an listed entity, or are you planning to merge it?
As of now, it remains a
separate listed entity.
It remains a separate listed
And what about plans, since now JSW One will be profitable?
Yes.
It'll break even at the EBITDA line. You are looking to do an IPO and monetize it.
Yes.
What's the timeline for that?
I think, the first goal and the first stepping stone towards IPO is get the company to profitability.
Yeah. But you have a roadmap for that, a clear
so
line
we have a
of sight.
roadmap. We had the same roadmap last year, so we didn't get there. But although the management keeps talking about IPO and all, at least from the steer from my side is let's get the profitability going. Let's see 1 or 2 quarters of profitable performance, and then we'll take the next step. So hopefully, if that happens in Q4, then we could expect an IPO in the second half of next year. But first, we've got to hold our horses. We've got to deliver on the numbers.
On that note, we'll slip into a very short break. We'll come back with more from Parth Jindal. Don't go anywhere. Welcome back. You're watching IPO KYC. We're in conversation with Parth Jindal on the JSW Cement IPO. What is your group level capacity utilization? And now with new capacity coming on stream, will there be incremental downward pressure as these capacities ramp up? I mean, what's the capacity utilization ramp up looking like?
Yeah, so last year we were at about 63% on a capacity utilization metric. Now again, when you look at our capacity utilization, you've got to look at 2 metrics, and the metric that we follow is one is the grinding capacity utilization, the second is the clinker capacity utilization. So our clinker capacity utilization was much higher at about 84% last year, and we expect that number to continuously inch up. Whereas our grinding capacity utilization is still, very similar to where it was last year. It's improving, but as we keep adding new capacity, maintaining it at around 70% also would be a good achievement. Till those, capacities stabilize and mature. So in our existing grinding units, you'd see our capacity utilization being northwards of 80, but in any new one, it starts lower and then it goes up. So I think in general, being around 70% is a good net metric for us, and that's the target we have for the grinding, and being at 90% plus for the clinker. So again, one of the nuances for us is if you look at our clinker balancing, people say, oh, you're 20 million grinding, but you're only 6.5 million clinker. That doesn't make any sense. How can you sell so much cement? And the answer to that is we have GGBS, which is a big product line, which doesn't require any clinker. Last year, we sold about 5.2 million tons of GGBS. Our aim is to sell slightly more than that. Significantly more than that this year. So even if you just look at last year's numbers, if you remove the 5.2 million tons of GGBS from our grinding, so that makes it about 15 million tons of grinding. And for 15 million tons of grinding, having 6.5 million tons of clinker, because we're a slag cement player, where in slag, you only need to add 35% of clinker, versus in fly ash, you need to add almost 60% of clinker. So because our clinker factor is lower, last year our clinker factor was 47%. So at 6.5 million net, you can make 13 million tons of cement, and the balance we keep for GGBS. So that's how our balancing works. Now, that's okay in the current geography that we are, because these are, I would call them steel-dependent geographies, because the south is Vijayanagar, is co-located within Vijayanagar Steel Plant. The west is co-located for Dolvi Steel Plant. The east is co-located for, Jharsuguda, the famous BPSL, Bhushan Power and Steel Plant, and we have units. But as we go to north and central, there's no slag, there's no steel. That would be a very traditional model where we only have fly ash linkages, and you'll see our clinker factor slightly go up over the years.
So now, Parth, let me get to acquisitions, right? You referred to it many times, and you also said it's cheaper for you to manufacture organically. There have been so many assets on the block. You seem to have missed out on a few. Is it the valuations holding you back? Was it because there is an IPO going on? Talk to us about the deals that you missed, and what are you in the fray for right now?
I think, like I said, we have to be very clear and very conscious of where we are in the industry. We are a 9th largest player. We are a medium-sized company with large ambitions, which JSW always has. Yeah. But if I, as JSW Cement, without support of the group, want to acquire any of these businesses, which an Ultratech wants, or an Adani wants, or a Shree wants, or a Dalmia wants, I know that I cannot bid them because they have more muscle power and they have bigger balance sheets. And that's why we have very clearly stayed away from these races. We went all in for Holcim. That was not Parth Jindal alone, that was Sajjan Jindal and the group going behind it. That was a totally different kettle of fish. After that, wherever cement had to bid, we've stayed away because we know we can't compete, number one. Second, if you see the assets that are available, they're all in the south. And most of them, if you look at Sanghi, sure they have in the west, but coming into the south. You look at Orient, you look at Penna, you look at India Cement, they're all in the south. We already have enough capacity in the south, and we are actually looking to enter more attractive markets like the north, like central, like the northeast. So if an opportunity comes in one of these geographies, now that we're listed and have currency, we'll try and compete. But again, I want to be very clear and very categorical on this, is that if I am competing with any of the big boys...
You don't want the group backing you for...
I mean, that's a decision we'll take if an asset is that exciting, turn them around in the first place.
So which are the assets on the block now that you would be interested in?
No, not very much actually. There's not very much available at the moment that is public, and we're not even hearing anything because there's
nothing that you're bidding for right now?
No, nothing. There are a few assets available in the south, but again, we don't want to go there.
Got that. So you said your aspiration is to be the 5th largest player by capacity. When do you think that will happen?
I think at 60 million tons we would be there or thereabouts. Obviously, there are others growing. So JK is growing, Ramco is growing. Nuvoco is growing. Everyone wants to be there. So
between 2030 to 2035, do you think you can get?
I think so. I mean,
hopeful.
I hope so.
So this Axo deal in pain, since you brought it up, I mean, you won that. But you lost a few on the cement side, right? What has that taught you about deal making in India?
I think personal relationships are very important. One thing that I learned is that you have to build an equation with whoever is the seller, and they have to believe that their business, the right home for their business is you. And that's something that I've learned, the hard way, I would say. And I think the second thing is that, you have to take that bold step. You have to take that leap of faith. It may not make sense on paper. You may be overpaying. You may be paying more than what you want or what business school has taught you or what everyone has taught you. But if you have conviction and you have belief that this is the right business for you, then you have to take that leap of faith within reason, or you have to take that leap of faith and say, I'm leaving it. It doesn't make sense for me, I'm out. So having that conviction or courage is needed. Either to say yes, it's always, everyone applauds you for taking the decision to say yes, because you make headlines and you come in the news and everything. But it takes, I would say, even more courage to say no, because you'll be asked questions like, why did you lose out? Why did you leave it? Why did somebody else take it? So I think both require courage.
Okay, just one final question then. You spoke about the legacy that you're inheriting from your family, right? What's the one piece of advice that you learned from them that shaped the way you are doing business, and where you respectfully disagreed?
I think the one thing that I've learned from my grandfather, from my uncle, from my father, is that always ask the question as to why you're doing something. Why does the world need another JSW Cement company or paint company or sports company or anything, EV company? Always solve that problem. Always solve that question, and how you're adding value to the lives of the Indian who you are serving. Second thing I've learned from them is sheer optimism about India. They are the biggest India bulls I've ever met, and that is infectious. When you're doing everything from a larger purpose, the purpose is not profit, the purpose is to build India. Everything that we do and everything that we want to do is to build a better India, so that India can challenge the rest of the world. And the third thing which I think respectfully disagreed on sometimes with my father is on leverage. Okay. Yeah, he wants to grow fast. He wants me to grow faster. He wants me to do more. He wants me to, accelerate. I've always told him, and we keep having this debate daily, is that you know, I'm not ready. I mean, my company is not ready to take on so much leverage, or my company is not ready to, you know, to scale so quickly, and it'll all happen with time. And he's obviously got way more experience than me, and he's taken way bolder, way bigger decisions than I have ever taken. And he's put literally everything on the line. And whenever I ask him, I said, Dad, you know, what if it had gone wrong when you took this decision? He says, I'll go back to Hisar. I don't care. I love Hisar, and I'll go back to Hisar. And I tell him that, Dad, I'm from Mumbai. I don't have anywhere to go. So I need to live here. So I'll grow at my pace. And he pushes me, and I listen to him to a degree, but sometimes we disagree on that.
Parth, but you yourself have big bets and bold ambitions, and the street's going to be watching this IPO very, very closely. Thank you very much for chatting.
Thank you.
Thank you.